Hi guys, I'd like to break down my recent Bitcoin trade as a number of people have been asking. So I've made this video as a case study to show you guys exactly how I approach Bitcoin and why I recently decided to get long in the space. I've been mentioning it a lot on the weekly trading wrap up. So I decided to make a short video here and explain my process. Why did I buy it? What was my thinking? Uh, what my philosophy versus Bitcoin, etc. So let's get started. First of all, let's talk about the background and philosophy that I have on Bitcoin. Um, I'm not a Bitcoin expert. I don't know much about the code or the underlying machinations behind its creation and stuff like that. Um, I didn't buy it since inception, which would have been a great trade. You would have made like over 1,000 extra money. So as an investment vehicle, I can't give you much better advice than other people out there who are experts on it. So as an investment, I can't say much, although over its short period of history, it has proven to be very, very good. For me, my expertise is trading. So I view it as a trading vehicle. Okay, so I will be approaching it as a trade and a trading vehicle uniquely. Okay, so without further ado, let me give you my general view on my philosophy on Bitcoin. So for me, Bitcoin is a levered play on the S&P 500, but with certain caveats. Okay, it is most certainly not a hedge. Okay, if you look at the history of Bitcoin here, we're going back to, let's say, 2015. It goes back 2010, but this is, like, you can see that it is certainly not a hedge to the market. When I mean hedge, I'm talking about a hedge versus the S&P 500. Okay, because you can see in the year 2000, as the S&P 500 tanked, so did Bitcoin. But in other periods where the S&P 500 was going up, you see Bitcoin basically go flat this entire period. 2024 is a perfect example. In the beginning of 2024, Bitcoin, this is all of 2024 here, okay? So it went up in the beginning, but then it was a huge period from March till now, and it was a sideways consolidation where the market kept going up. So this is why it is not a hedge, because the correlation between Bitcoin and the market is all over the place. Okay, and for those people who aren't familiar with the term correlation, it's just a statistical phrase that denotes how one asset moves vis-a-vis another one. Okay, and correlation can range between +1 to -1. Okay, and everything in between. +1 is a perfectly positive correlation. That means if Bitcoin, or the market, I should say, the underlying asset first, if the market goes up by 1%, Bitcoin will go up by 1% too. And vice versa. If the market goes down by 1%, Bitcoin will go down by 1% on that day. It's perfectly positively correlated. They're almost the same. And a correlation of -1 is a perfectly negative correlation. That means if the market goes up 1%, Bitcoin will go down 1%, and vice versa. Okay, and obviously in the middle it's zero. When you have a zero correlation, that means both assets are completely unrelated. They march to their own drummer. They move to their own beat. Okay, so they have no nothing to do with each other. Completely different markets and unique. And Bitcoin is a unique market. Okay, so I like to dispel the myth that it's a hedge, because these correlations that we talked about, vary over time. Sometimes Bitcoin is almost perfectly correlated with the market, like 0.9 correlation, and sometimes it's almost perfectly negative, and sometimes it's zero. So it's just all over the place. Okay, so it's certainly not a hedge. Whereas gold is generally a better hedge uh, on the market than Bitcoin is. And that's not because gold and the market are negatively correlated always. I mean, the correlation between gold and the market also fluctuates. Sometimes it's positive, sometimes it's negative, sometimes it's zero. Okay, but the point is that during harsh economic times when the market goes down, gold tends to hold up better for a brief period of time. Okay, so it's a little bit, it turns into a slight negative correlation when the markets are in trouble, which if you're running a portfolio, you would want to hold that kind of asset in your portfolio. In fact, a number of studies, academic studies, have been done that show that a portfolio of like 10, 20% gold and like 80, 90% stocks outperforms a portfolio that is just 100% invested in stocks on a risk-adjusted return basis. And that's because of the negative correlation with gold and the market during times of need. Okay, so gold has a, I don't know, 5,000-year history of itself playing its role as a hedge. Okay, so we do know that, and we have academic evidence. Whereas Bitcoin, it doesn't have a long history. I mean, we just saw that it goes back to 2010. So you can't really make a long-term view on something that has been in existence for just, what, 15 years? Barely. So, and in those 15 years, it's been very volatile, and its correlations with the market just fluctuate crazy. So it's not a market hedge, okay? So get that out of your heads. So for me, Bitcoin is a money-making trading vehicle, and only when the right situation comes along, okay? So for me, what is the right situation, okay? So first of all, I have 3 criteria when it comes to buying Bitcoin, okay? First of all, I have to have a macro view, a fundamental view that the market itself is bullish. So I will not trade Bitcoin if I think the market is in a negative trend or bearish or even neutral, okay? The first and foremost criterion that I must have for me to even think of trading Bitcoin is that the market has to be in a bullish trend, okay? But that's not enough, because as we see, the correlations vary. So the market being in a bullish trend is not enough. You have to have other things. And for me, the second criteria that has to trigger is that there has to be some kind of catalyst, preferably a liquidity catalyst, okay? So if you notice here, the market and Bitcoin tend to move together when there is a liquidity event, okay? So let's go to the market here. Okay, this is the S&P 500. I like to draw these blue lines across to denote levels that have been breached, so just ignore them. They're not really necessary for this purpose, but I mean, if you go down, this is the year 2000, okay? Tanked. But then as it was going up, okay, around March, April, you saw that Bitcoin, where is it here? Here, okay. Bitcoin started going up as well. And what happened during those times? There was massive liquidity being injected into the market by the Fed and by the government. Okay, they were doing a lot of deficit spending. Okay, stimulus checks, etc. Okay, so you had a lot of liquidity coming in. So whenever there's a liquidity event of any kind, it'll go up. Okay. So that is the second criterion. And the third criterion is a good technical setup. Now I go to the charts. So as you can see, during 2024, the market SPY, so let's say March 2024, where is it? Here, March 2024. The market kept going up, okay, on a general uptrend. Okay, it went from, let's say, 500 to 600, okay? So by March 2024, it was at 508 to 604, okay? So that's like 100 points, like a 20% return, okay? It was, okay, you had these downturns, but generally going up. But what happened to Bitcoin, okay? We mentioned before that Bitcoin since March, February, March here, this is March, okay? Nothing. Flat. Okay, that's because we didn't have the third criterion, which, like, you had a general market uptrend, yes. Did we have a catalyst? Not really. What was the monetary catalyst in 2024? Does anybody remember? No, I don't remember the Fed printing. Maybe lowering rates, okay, a little bit, but they weren't really, and they started lowering later. they didn't really, you didn't hear any kind of money printing or any kind of near term catalyst where money would be flowing into the Bitcoin space. Okay, so you didn't have criteria 2, and you didn't have criterion 3, the technical setup. Technical setup was just generally in a consolidation pattern. So this was not the time to be in Bitcoin. You just had 1 out of 3 criterion that were tripped. What made it special was this day right here. And this is November 6th, 2024. Okay. What happened November 6th? Well, obviously President Trump was elected. Okay. And you had a huge move in the market. SPY. This is November 6th right here. Huge move with good volume, okay, as he was elected. So the market after this move, it went from what, 575-ish to 605, so like a 30-point move. It's not a big deal, okay? But Bitcoin, after that catalyst, was up from like what, 70,000 and eventually went up to 103. That's like 30, that's like a 40, 45, 50% move. Whereas the market went up just 30 points. What is that? I don't know. 30 points out of like 500 is what? 6%. This one went up like 40, 50%. Okay. So this is why it's a levered play on the market. It'll go up higher than the market. Okay. But only if those 3 criteria, in my opinion, are tripped. Okay. So this is when you want it to be in. You had a general market uptrend, check. You had 2, which was some kind of catalyst and liquidity event, check. Because Trump is very positive Bitcoin, and he's thinking about creating a Bitcoin reserve. So he's thinking of spending US government money in buying Bitcoin to create a reserve, like the oil reserve, like the strategic petroleum reserve. So that is a liquidity event, or let's call it liquidity adjacent. Okay, a lot of money will be flowing into Bitcoin under the Trump administration. Supposedly, that's what he said. We're assuming that he's going to be a man of his word and keep it. So that was enough to break it out of this long consolidation, like 8-month consolidation or so. I don't know what it is, March, April. About 8 months. So those 3 criteria, when they line up, are fire for Bitcoin. Look at it. Okay, it ripped. So this is why I decided to buy Bitcoin around this area a lot. I had a little bit here before that in anticipation, but really I started buying around here more. Okay, so how do you buy Bitcoin? Let's say you can't just buy Bitcoin, like you're not computer savvy. You have a brokerage account and you want to buy something that is like a proxy to Bitcoin. Well, there are many proxies. You can buy the Grayscale Bitcoin Trust. Okay, this was November. Oh no, sorry. This is November 6th right here. So you could have bought it at around 59. Okay, and now it's at 80. Okay, that's a good move. My friend Greg, he bought the Fidelity Bitcoin Trust, Fidelity Bitcoin Fund. Okay, this right here is November 6th, a real breakout. This tracks it better. Okay, this is like, I would say this is a better proxy if you want to just buy Bitcoin straight. Okay, the Fidelity Wise Origin Bitcoin Fund. Okay, symbol FBTC. Or you could have just bought some individual stocks that are supposed to be Bitcoin plays, like a number of the miners. One of them is Mara. Okay, Mara Holdings. This arrow here denotes November 6th. Look at it. Is this a good or a poor play on Bitcoin? Obviously it's poor because it went from like $20 to 30. That's pretty good, I should say. But then all the way back down, okay? And if you notice, it's not even close to its all-time highs, okay? The stock to buy that was the best Bitcoin proxy was MicroStrategy, okay? Where's November? November 6th, right here, okay? Right here, right around this area. 260. It went to 525. It's at 410 now, but still, this is what you want. In fact, it broke out from its highs before that. Let's put a little indicator here of this. It doesn't have to be perfect, but it broke out around here, retested, and back up. Like you could have technically bought the breakout even before at 210, okay, and you'd be up way more. But if you waited till the election or the day after, you would have bought it at 260, which is still pretty good. Okay, and nothing has broken. It's still a big blow-off move, but here it's consolidating. It could still go up. I suspect Bitcoin is going to go up higher. I mentioned it in the most recent WTW podcast that I am more bullish Bitcoin based on its behavior on Thursday and Friday than I am the market, because it held up better than the market going as the market was going down. So it was like giving you a little hint about how it was stronger than normal. And currently, I'm filming this at around very late morning on a Sunday the 15th, and it's at 103,000. Okay, on Friday it closed at, let's say Friday closed at 1014. So this is going up over the weekend. People are buying it over the weekend. Okay, so you have to understand that Bitcoin is a very unique market, and you need to trade it in a very unique way. Trade it. In terms of investing, you can do whatever you want, but you have to trade it in a very unique way, okay? And don't, like, MicroStrategy would be the best proxy to trade, but there are others like Riot, which is another miner that completely sucked. Look, this candle right here is probably the 6th. Am I right? Yeah, this giant candle is the 6th, and it's like basically flat. Not even close to its highs. Look at that. These are the highs. So these are terrible, terrible proxies. These Bitcoin miners, okay? The best one is MicroStrategy, but a lot of these miners now are trying to emulate the Saylor strategy of issuing zero coupon convertible debt and using the proceeds to buy Bitcoin and hold it in their balance sheet. That's been working well for MicroStrategy, but I suspect MicroStrategy is a levered play on Bitcoin, so that's why it's going up even much higher. So, I mean, if you want to play the Bitcoin strategy, you don't have to actually buy Bitcoin itself. You can buy its proxies, okay? Or if all you have is a brokerage account and you don't have anything on, a Coinbase account or anything to buy Bitcoin through, you can use the Fidelity Bitcoin Trust here, or the Bitcoin ETF, or the Grayscale Bitcoin Trust here. Those are okay proxies. I would recommend the Fidelity one and MicroStrategy if you want to buy Bitcoin just like that in a brokerage account and hold it like a stock. Okay. So, like in conclusion, the reason that I buy Bitcoin is that I consider it a levered play on the S&P 500. Okay. In fact, if you don't want to buy any stock, and you're bullish the market and you don't know any other way of doing it, just buy Bitcoin as long as all three criteria are fulfilled. You need to have a general market uptrend with a bullish market bias, 1. 2, you need to have some kind of catalyst or liquidity event, okay, which is anything that will pump money into the Bitcoin space, because it is a small space. And 3, you want to have a good technical setup. You have all those 3 behind you. You have all full wind in your sails, and your odds of success on the trade will be much higher than they were before. And I also want to say as a caveat, don't think of Bitcoin as a hedge. It's not. It's a supercharger on the market given the right criteria. So that is my analysis on Bitcoin, my thoughts, and why I decided to play it recently.